close of 720. Everything looks good here for the Russell to extend its move higher. We're going to be looking for a slight pullback here. So let's go into that vantage point, predicted high and predicted low, and see what we have happening for tomorrow. Now, again, the Russell has been in a very good move here. We've got this call from vantage point in the early part of February. And it's still extending higher. A lot of people looking to sell, but there's no reason to sell if we have a good trending move. Now 712.81 is our predicted low. 725.15 is our 725.15 is our predicted high. We want to remain in the buy position here. We were looking for a slight pullback towards the 712.81 area to make sure that you know, we doing this forecasting and putting these trades out tonight, we're actually forecasting for tomorrow's trades. We're going to wait, let the market come to us, and get into those buy positions as we've done on so many other occasions. Now again, 712.81 is our area. We've got all stops in this particular case would be below this 700 area. We can see this lone candlestick here has come down off the triple EMA, tried to get through, couldn't get through, and subsequently extended all the way back well up over that 700 mark. Now let's go back in, add a couple of other indicators to this one too. Let's put on that predicted high and predicted low, and let's see how accurate the predicted high and the predicted low from vantage point has been over the last little while. Now this is an indicator I've always enjoyed. Now we can see here, I'm just going to take this off so everybody can see it. The predicted high and predicted low, the low was breached right here. That's about it. Over the last little while, we can see that the market's been running along. This is a great setup using the Vantage Point software because we're using the triple EMA. We only have predicted moving averages on the screen. Then what we're doing here is we're looking for the market to come down. We're using the triple EMA predicted moving and the predicted moving averages as major support lines, and then using the predicted highs and the predicted lows to look for that daily range. So in short, we've got an intraday trade setup, a medium-term trade setup, and a long-term trade setup all in one. So everything looks good here for this. Now you'll notice that I very seldomly put too many other indicators on my chart. Very important, guys, that we don't clutter up these charts. There's no reason for me to put the neural index on this chart because it very clearly shows me the neural index on the daily report. So I don't really need to add that to the chart because it's not telling me anything that I don't already know. So bringing that back up, we're going to look back in here just to demonstrate that. We can see here the neural index, which is the 1, has turned from the last 2 days has been 0. We've now turned to 1. So we're expecting again another move higher, a little minor correction in the Russell 2000, the E-mini. And again, I think this correction is done, and now we're going to get an even more aggressive move higher. So everything looks good for that, and that is our second position. I've run through a number of different indicators there. But again, I can't stress enough how important it is to keep your trading simple, keep your charts uncluttered, add your indicators as you need to, one at a time, understand what the indicator is doing, and then we can go from there. Now that's our second position. Now our third position, we're going to very briefly, I'm going to put out a third position here tomorrow because I think I can expect what's going to happen. I'm going to be looking for the crude oil contracts tomorrow to move lower. Now on any move higher tomorrow, we're going to be looking to set short positions again. I think crude is getting ready for a bit more of an aggressive move to the downside to test that lower area. Now the neural index is pointing up, so we've closed at 83.45. Now on a move towards 84.17, this is our third trade for the day. It's kind of a bonus trade that I like to throw in every once in a while. So 84.17 on a move towards the crude oil futures. We're going to look for that area and then get into our short positions. And then again, you can see we're looking for this extension down towards this 82.21 area with all of the neural index, all of the predicted short-term, medium, and long-term differences all very negative. The neural index pointing up, the neural index again is a 24-hour index, 24-hour indicator, It's not a long-term indicator, so we're going to use that as a signal. So when it moves higher, we're going to then get into again short positions. Now again, crude oil volatile as the commodities are, but I do believe it's getting ready for a bigger move to the downside. Now, one of the reasons I state that is because I look at the US dollar index, and we can see here now that the 3-day has crossed over the 8-day and the 18-day predicted moving average, and this tells me that the US dollar index with this close of 81.05 could be getting ready to regain the strength and start probably its last leg to the top side, and from there we'll probably start looking at some US dollar weakness. But for now, I think we still have a little bit of life left in it, and that should push the commodity prices lower. So again, my name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for April the 21st, 2020.